He passed the life insurance exam on his fourth attempt. Failed 3x. Question 1. If an applicant fails the exam 3 times, what is a common state requirement? They can never take it again. They may face a mandatory waiting period before retesting. They must pay triple the fee. They are granted a license anyway. Many states impose a waiting period, example, 30 days to 6 months, after multiple failed attempts to ensure adequate study time. Question 2. A common reason for failing the life insurance exam multiple times is over-preparing, memorizing practice questions instead of learning concepts, reading the book too slowly, using a calculator. Test vendors constantly rewrite questions. Memorizing practice questions fails because the actual test questions will look different. Question 3. When a test question contains the word except, the test taker should look for the correct statement, look for the false statement, skip the question, choose all of the above. Negative phrasing like except or not requires the candidate to identify the one false statement among true ones. Question 4. Which of the following is a key trick concept that trips up test takers? Premium versus cash value, absolute versus collateral assignment, age versus weight, agent versus broker. Absolute assignment is a permanent transfer of all rights, collateral is a temporary transfer for a loan. Confusing these is a common trap. Question 5. If a question asks about the entire contract provision, what does it include? Just the policy and a copy of the application, the policy, application, and medical records, the agent's notes. The entire contract consists strictly of the written policy document, any riders, and the attached copy of the original application. Question 6. A tricky concept: what is the difference between a participating and non-participating policy? Par policies pay dividends, non-par do not. Par policies are cheaper. Non-par policies share in profits. There is no difference. Participating policies, usually from mutuals, pay dividends to policyholders. Non-participating, from stock companies, do not. Question 7. Regarding the grace period, what happens if the insured dies during this time? The claim is denied. The full benefit is paid, minus the past due premium. Only the premiums are returned. The beneficiary must pay the premium first. If death occurs during the grace period, the policy is valid, but the unpaid premium is deducted from the death benefit. Question 8. Which scenario accurately describes adverse selection? Healthy people buying insurance. A person buying insurance knowing they are about to have a high-risk surgery. An agent stealing premiums. An insurer denying a claim. Adverse selection is the tendency of individuals with a higher probability of loss to seek insurance more aggressively than average risks. Question 9. What is the difference between peril and hazard? They are synonyms. A hazard is the cause of loss, a peril increases the chance of loss. A peril is the cause of loss, a hazard increases the chance of loss. Perils are only in property insurance. A peril, like fire or death, causes the loss. A hazard, like smoking or slippery floors, increases the likelihood of a peril occurring. Question 10. To avoid failing again, a candidate should focus heavily on understanding riders and provisions, the history of insurance, the exact address of the DOI, complex math formulas. Policy riders, provisions, and options make up a massive, complex portion of the exam that requires deep comprehension. Question 11. If a policy is paid up, it means the cash value equals the face amount. No further premiums are required, but coverage remains in force. The policy has expired. The insurer canceled it. A paid-up policy requires no more premiums, but the death benefit remains active until maturity or death. Question 12. In a universal life policy, what two elements are unbundled? Premium and death benefit. Insurance protection, term, and cash value. Dividends and interest. Agent and broker. Universal life separates the cost of insurance, annually renewable term, from the cash value savings element. Question 13. A common trap on the exam: who is the annuitant? The person paying the premium. The person whose life expectancy determines the annuity payouts. The beneficiary. The insurance company. The annuitant is the person receiving the income stream, and payouts are based on their life expectancy. Question 14. What is the consequence of misstating one's age on a life application? The policy is void. The death benefit is adjusted to what the premium would have bought at the correct age. The agent is fined. Premiums are doubled. The misstatement of age provision allows the insurer to adjust the death benefit rather than voiding the policy, even after the contestable period. Question 15. Test takers often confuse reinstatement with renewal. Reinstatement requires only paying the premium, proof of insurability, and payment of back premiums with interest. A new medical exam only. Nothing. To reinstate a lapsed policy, the insured must pay past due premiums plus interest and prove they are still insurable. Question 16. What is the purpose of the coordination of benefits (COB) provision? To increase payouts. To prevent overinsurance when a person has multiple group health plans. To coordinate agents. To pay out dividends. COB ensures that multiple health plans don't pay more than 100% of the total medical expenses, preventing the insured from profiting. Question 17. Which of the following is not a right of a policy owner? Changing an irrevocable beneficiary without their consent, taking a policy loan, assigning the policy, selecting a dividend option. A policy owner cannot change an irrevocable beneficiary without the beneficiary's written consent. Question 18. A tricky timeline question: how long is the free look period for replacing a life insurance policy? 10 days. Usually 20 to 30 days, longer than a standard new policy. 60 days. No free look for replacements. States often require a longer free look period, example, 30 days, when a policy is being replaced to protect the consumer from churning. Question 19. What does a conditional receipt do? Provides coverage immediately unconditionally. Makes coverage effective on the date of application or medical exam, provided the applicant is found insurable. Guarantees a policy will be issued. Only acts as a receipt for cash. A conditional receipt provides interim coverage if the underwriter eventually approves the application as standard or better. Question 20. For someone who has failed 3 times, the best advice for exam day is to rush through. Read every word carefully, as missing one word like not changes the entire answer. Only answer the ones they know. Write notes on their hand. Insurance exams test reading comprehension as much as insurance knowledge. Missing a single word can lead to the wrong answer.